Hello and welcome to ATFX's Bank of England trading preview. My name's Nick Twidale, I'm the Chief Market Analyst. Today we're going to look at possible moves in the currencies, mainly cable, euro sterling, sterling yen, and we might even have a little dabble with sterling Aussie as well to see where we could see some potential moves from what could be a very interesting Bank of England meeting later this week. So what are we looking for? First of all, the market's fully expecting a 25 basis point cut from the Bank of England. It is looking well priced in, despite some, I suppose, disputes within the MPC and also conflicting updates from data, really. So we've still got relatively high inflation numbers in the UK, which are keeping some members of the MPC wanting to either stay on hold and even looking at the next moves that could go up in the future. Whereas we've got employment numbers which are really concerning other members of the MPC, which are probably locking in this 25 basis point cut. So unemployment rate jumped up to 4.7%, pretty high against most of the other major jurisdictions, probably with the exceptions of Canada and New Zealand. However, CPI data, major inflation data that the MPC does look at, still holding up there at 3.6%. So conflicting moves here. And what we could see from this is going to make some very interesting trading opportunities in cable, in euro sterling, possibly sterling yen, and even sterling Aussie as well in the coming days. And with this indications that we get from the Bank of England, could be some better longer term opportunities. What I'm going to do is have a look at a couple of our charts, see where there's some trading opportunities from where prices are currently. We're looking at those longer term charts, so we're expecting markets to be within 50 to 60 points probably of where we're sitting now. So here we are on the daily chart for cable. Interesting positioning as we can see for cable. Now, once again, as I said, the MPC, it's going to come down to the forward guidance that we get from the MPC and Governor Andrew Bailey. If we see a slightly more dovish MPC, meaning we're going to see more rate cuts coming up into the end of the year, expect some pressure to come onto cable and push us down to this short-term support, just above that 131.50, around about 131.60. If we get a break there, it could take us down to that 200-day moving average, just around 129.80, so just south of that key strike level, the 130, and then it opens away for bigger moves down here. Clearly less dovish, and this could be a possibility, even a slightly hawkish bend. We're going to take us back up towards these 136 highs that we saw not too long ago, just last week, really. And then that major resistance lines coming in around about 137.60, and then obviously the previous high, which was, there you go, 137.88. Now, the interesting thing that we're going to be looking for from the meeting, and it's going to come with that forward guidance, but the votes are going to be very key this time. 9 members of the MPC, and they're expected to be split 3 different ways, which is fairly unusual, to be honest. 5 are expected to go for the 25 basis point cut. That's why we're expecting to get this cut. 2 looking for a hold because they're concerned with those high inflation numbers. Don't want to see us don't want to see the Bank of England pulling back too early. 2 very concerned with the job numbers, wanting to go 50 basis points. That's why we're sitting at that 25 point expectation. If we get a leaning one way or the other, that could change the field to either a more dovish expectation, i.e. more looking for that 50 basis points, or a more or less dovish, slightly hawkish, looking for the hold. Hold takes us higher, as I said before. More dovish, down, possible breaks, takes us down lower. Right, we're going to go and look at a couple of the other charts now as well. So I'll just take us very briefly over to the hourly chart. The levels, to be honest, are pretty much the same. Back up here we go. We're up to about 135 there, as you can see. Resistance levels coming in on the hourly. Support, similar levels, 130, 160-ish. Those lows back down, there we go, 131.58. And where we're hitting in there, 130, 136. Now we're going to go and look at a couple of different charts as well. A couple of the crosses where there could be some much better longer term trend trading opportunities, especially if we get something different from the MPC. This takes out the dollar part, so we're moving away from cable. Going to look at euro sterling and sterling yen. So here we are. This is the daily chart for euro sterling. Could be very interesting and well. And a lot of people are looking for some potentially big moves in the euro sterling chart. So What we're looking for, when we're looking at euro sterling, we're looking at what the ECB is doing for longer term interest rate differential trades, as well as the Bank of England. Once again, though, if we get a more dovish, we're looking for downside for sterling. That's upside for euro sterling. It could take us back up here to test out these resistance trend lines around about 87.60 and that previous high 87.64. So that's not too far a target away, considering we're trading around 87 figure. If we get more hawkish, certainly more probably less dovish MPC, it could take us down. Initial support will come in around this 86 level, where we got a couple of lows there, and then it takes us all the way down to this longer term support line coming in around 84.47. There's a lot of people looking also at what's gone on in the global trade environment recently. Yes, we know everyone's been looking at tariffs. The UK has seemed to have got away a lot lighter than other jurisdictions, and obviously we know currencies have been moving a lot on the back of tariff updates from the US. If you're looking at it purely from that point of view, we may see more interest rate cuts coming in from the euro, from the ECB, rather than the Bank of England. And as I said, it's a sticky situation for the Bank of England. Could lead to those downside moves. Once again, we're looking at those levels again, 86 a figure and all the way down at 84.50. One more chart to look at before we let you go, but plenty of trading opportunities coming up here. Going to go and have a quick look at sterling yen. So this is the daily chart on sterling yen. Once again, somewhere where we could get a nice interest rate differential opportunity trade, and some of it's already been priced in. If we're looking at this is sterling yen all the way hitting highs up here, only on the 31st of July, right? Up at 199.50, not too far from the 200. And there you go, high at 199.96. Nice big psychological level that we can focus on in sterling yen. We're back down around that 195.30, but we're getting a slightly more hawkish Bank of Japan at the moment. Now that tariff issues out of the way with the US, obviously tariff issues also for the time being out of the way for the UK and for the Bank of England. So it could be a double whammy. If we get a more dovish MPC, Bank of England, looking at more rate cuts coming up fairly hard, and we maintain a little bit more of a hawkish Bank of Japan that's looking to raise rates because of their inflation issues, that would take sterling yen lower. Initial target 193.73, and then we're looking all the way down here sub 190, another key psych level. Plenty of opportunities coming up there. As I said, once again, it's probably going to come back to the votes that we see from the MPC members, and the votes are obviously going to come back to what we see from the statement, where we're looking forward. If we do get a more moderate call from the MPC, and let's be honest, central banks do that, we'll see some movements, but not too many. What we're looking for this trading opportunity is a big change from expectation. If we get it, we've got plenty of trading opportunities coming up in cable, euro sterling, and sterling yen. As always, please subscribe to our channel. We're keeping you informed on everything that's going on in the markets, and there's plenty going on at the moment. So thanks very much for listening. Good luck with your trading. And if you need anything from us at ATFX, please do let us know. Thank you.